G'day, how's it going? Good morning. A little bit of a later start today than usual. Hope you don't mind. Let me zoom out a bit. I'm gonna put this one back over here. All right, let's start on the daily. Bitcoin. Maybe I'll wait for a few more people to filter through before I talk about what I'm going to talk about. Hope you've all been well. And if you've been trading, hopefully it's been successful. We all know what it's like when it doesn't work out, that's for sure. It's easy to lose. All right, 5 people. Everyone's kind of gone to bed, I think. What is it, 9:38 p.m. Eastern? That's alright. I'm just going to get into it. They can watch it on replay later on if they missed it. So today with Bitcoin, let me turn my mic gain down a bit. There we go, that's a bit better. Still pulling back. So like we said in the previous stream, or like I said in the previous stream, we set in this low here, we pivoted, came up, made a high. Now the measure from the low to the high gives us this Fibonacci pocket here, this golden retracement zone. The 618 to the 65. Grade A Music, how you doing? Django, how you doing, man? So this is a likely area for some kind of a bounce off this pullback here, this sell-off. If it's, if the fundamental environment doesn't change. So, if the stock market decides to crash like crazy, you best believe Bitcoin's probably going to do similar things like crypto. So if I go, good morning, Michael. If I go out to the 4-hourly chart and zoom right out, you can see I've got a lot of TA happening in this zone, hence all the lines. But we want to try and see where we were last time we were at that level. And that was on the rise coming up from late 2020 into the bull run of 2021. So if we zoom in on the 4-hour chart here, this is our current yearly low, this dark blue line. And you can see how it was like a retest of this low here from back in December 2020. So that there, I think, is fairly solid support for now. If we lose that, this would be the next level, this low here. And then if we lose that, this purple line is our 2019 market high of $14,000. So those are the numbers we're playing with here. That's like the bearish scenario if we were to push down through and test those supports again. Now, in the current part of the market, we're in this zone here. So back in late 2020, December 2020, we had this range here. And that is currently the range we're trading in now, like today. So price is obviously currently where that red dotted line is now. So we're coming back and testing support structure that's, 2 years old, basically. So I've got this wick down marked here on the blue dashed line. And if we go to the present time, there's that same blue dashed line here. So we could come down to retest that zone. Now, the gray line, the gray solid line here is the 22K level. And that golden pocket, the orange bar going here, that is measured off this low to that high. So that's the pullback zone. So somewhere between those 3 points, I think it's reasonable to suggest we get some kind of a bounce in that zone before moving higher. If we get some dramatic moves, like some liquidation hunts, then we may wick down and get back in touch with the bottom of the line of this ascending channel here, which would be a retest of about 21,200-ish. But yeah, I think if things are to remain fairly, healthy and bullish, then I think we get some kind of a bounce in this area, potentially like an inverse head and shoulders as well. So that's what I've got there. Now this shadow, this ghost pattern that I have here, I'll turn it up so that you can see it. That's the way price climbed in 2020 from that low. That's how rapid it made it up to, to push up higher. So you can see at the moment, we seem to be spending a lot more time building up to this previous level. So that's a comparison of the time it took for us to leave that zone back in 2020. It was the start of a bull market, basically. So that's why things were moving quite rapid. But now you can see, there's still lots of fear in the market. So it's taking 3 times as long to get, up to these prices, the 24,500. Or, yeah, thereabouts. So I'm still optimistic. I still think we're getting up above and making new highs for, the last couple of months we've been down here. I don't doubt. Yeah, I'm fairly confident we're going to head back up. It might take a week or two to get there, but I think the high 20s, if not 30K, is on the cards, followed by potentially a big retracement after that test, because that 30K level is heavy resistance, as it produced heavy support multiple times. So let me delete that one, and I'll show you what I mean. If I go back out on the daily chart, 30K is this level here, this white line. So you can see how much activity we've had off 30K. Many times we've found support and price action at 30K. So if price comes up, we're definitely gonna see some kind of inflection or reaction off that $30,000 price level. But if it just produces a pullback and then we retest and break it, then that's really cool too. But yeah, I think it would be a reasonable spot to take some kind of profits at around high 20s, even to 30K there. So let's look at the short picture, the short term, what's been happening in the here and now. So currently we are holding what seems to be this support here, this wick down that we made back on the 28th of July. There's actually a double bottom here. You can see if I zoom in. There's 2 wicks to the downside that hit that 22,580, is it? About that? 22,580. So that is the support range, or that's the level that might produce support. It's a very ambitious support level at the moment. So if that fails, we've got all of these to potentially catch us and produce a bounce, or a reversal to get us back on trend for an uptrend. But yeah, still in a bear trend at the present time on the shorter picture. So I'll show you what I mean. If I do a bit of a channel here between these two areas, you'll see, yeah, it's a downtrend. And then, obviously this section here, we experience the uptrend. So that's essentially what price is. I mean, the markets, it's a series of downs and ups. So we're just experiencing the downtrend. I think we're going to obviously get, well, not obviously, but my money's on another reversal bounce here. So a pivot off this zone here in the upcoming hours, if not couple of days. So we'll see how it goes. If we lose these areas of support, then it's probably going down to 20,000, which is the next major level down here. But yeah, looking for that bounce happening around this spot. So let me delete that. Let's check out the oscillators now. So we've had a look at the price structure, the market structure, the highs and the lows. I'll delete that as well. So let's start it out on the daily chart. Now, we've just come off the back of some bearish divergence. Here, you can see this wave here produced a high, and then the second wave produced a higher high on price, but a lower high on oscillation. So you can see by the histogram bars here, the bars come up to a high point there, but a lower high here, which is bearish divergence. So if I just grab my mouse here, you can see that divergence. Let me just maximize this a little so you can really see it. And then we'll do the same on the price. So when you get a higher high on price, but a lower high on oscillation, no matter what oscillator you're using, that is divergence. So lower high here, and the corresponding highs being higher here. And that is why the cipher indicator has marked a divergence line right here. Now that's the daily, so let's delete those lines and reset the view here. Let's check out the other time frames. Let's work our way back down. So 4-hourly chart. So we're basically playing out a pullback right now. How deep the pullback goes, I guess we'll find out. But I've just told you my targets there. So hopefully we get a bounce. Now let's go back. So 4-hour. The MACD is pulling back beautifully, ready to do a potential cross. So this is a MACD cross on the bottom side, which produces an uptrend, just like we had here, producing that bounce. And back here as well. The 4-hour MACD cross. Awesome signal to enter a trade. So if we get that here, it might be, in the next couple of days, or, might happen tomorrow even, hopefully. But yeah, we've had a couple of buy signals come through here. So if we correspond the buy signals, which are the green dots on the bottom here on the cipher indicator. So we had a cluster of buys through here, those 3 dots. We had a single buy signal here, and then we've got recently just come in a single buy signal there. And then obviously there's these 2 here, and then there's a golden buy right here, which was the yearly low. So the current year's low, 2022. And yeah, so if you can see, if you were to buy where the cipher indicator is indicating or telling you to buy, these produce really nice entries for longs. And then if you're taking profit on the red dots, then those are really good sell signals. If you're playing both directions, like buying, going long and shorting, selling short, so you know you can play the market in both ways. So that produced a positive trade. Open a short on the red dots, and then close the short on the green at the bottom. That produced positive trade. Open longs where you closed your shorts. Sell into the signals. So there was a small sell signal there, a bigger sell signal here, and then a final sell signal up here. Those 3. So you can think of it as averaging out. That produced a positive trade as well. So that's 3 in a row. Go short at the red signals around here, and then take profit by buying back in down here. Another positive movement signaled by the cipher indicator on the 4-hour time frame. Now this one's interesting. So there's a whole bunch of sells here as price climbed up. So that would have been tricky, but if you're dollar cost averaging with this technique, then you'll still capture the move, and you'll build your short as well. So open first short order here, second short order here, third here, fourth and fifth up here. So by that time, if you're dollar cost averaging, opening your short position, your average would have lied somewhere here. The market pulled back, and then you can take profit on the green signal, the buy signal down here. So another positive movement, 2 movements, so up and down. So what's that? 1, 2, 3, 4, 5, 6 trades that have all resulted in gain. Now, so the most recent move, let's get that swing happening as well. So if that's the success rate of the cipher indicator with its signals, and it's giving you a buy signal here, or at least an initial buy, you don't have to go all in, but if you take that as a signal there for a buy, let's say you're prepared to make up to 3 buys, open your first buy on the first green dot, cool. If it swings down and produces another green dot later down the track, like let's say it dips down here and it's another green dot, then your second buy can be at that green dot. Bang, right there. And then if that fails and we drop down to, God forbid, 20K, you've got a third buy there to capture that. If we get a third green dot. And you'll see that the dots vary in size and like brightness. So these are just small signals. You can certainly see on the sell side, see you got a small sell here and then a large sell here. So that's like more confirmation of the move, like of the signal there when it's brighter and bigger. So you had a really big bright sell signal right here on this crazy wick right here. And then a second fairly large, but not as bright, red sell signal here to mark up the top of that. So yeah, that's a strategy for the 4 hour for swing trading. So this isn't day trading, this is more of a swing. You're playing, positions that last a week or more, like, maybe 7 days, 8 days. Let's count it out, the length between the bottom to the top. Yeah, 7 days. And then this move, the top to the bottom, that was 6 days, 4 hours. And then the bottom here to the top, 4 days. So yeah, ranging from, 3 to 8 days, roughly, these moves. So those are nice swings to keep you busy in the bear market. So yeah, that's where we're at right now. We've got, let's mark it up and let's back test this. So I'm going to label this the 4 hour time frame indicator. And buy sell signals. Buy for B indicator. So we are buying on green dots, selling on red dots on the 4 hourly time frame. So what I might do, I'm going to cut all of this text out, delete that, and then make it an anchored text so that it stays on our chart. Make that size like, that's cool. All right, so that'll anchor itself on the chart. Maybe we'll put it, we'll put it there. So now that we've got that, what we want to do is mark out where those hypothetical signals were. So we had a buy. What will we use for our position? Let's go with a circle. Yeah, sure. Okay, so buy position 1 will look something like this. And we'll put that where the indication. So somewhere on that candle was the first buy. So we've bought in. Our position sits somewhere on that candle. So we're probably currently down on our position, which is totally fine because it's just it's the first of 3 buys. Let's just add some other conditions here. Dollar cost average up to 3. Say 3 times. And then, we'll say the dollar cost averaging covers buying and selling. So we won't be selling all at once. We'll be easing out, depending on the size of the dots, I reckon. So if we're getting small dots, it's, you know, that's a dollar cost average dot. If we're getting big chunky red dots, then that's more of a, you know, close the entire position type deal. Just sort of have to measure out, like, use your best judgment as to, you know, how you want to leave or enter the positions depending on the size of the signal, and as well as other factors like other oscillators like the MACD. But anyway, we'll keep it simple. We'll just focus on the cipher indicator. So hit OK there. Anchor that in. Now, what I'll do while we don't need that, I'll just hide it, and I'll add in here. Where did it? Here we go. Anchored text. So I'll just call this. Let's see. Cipher data strategy. So we can bring that up when we need to revisit the strategy. All right. So let me open up. This is what the fibs are doing at the moment. So we're currently sitting at the 0.5 fib, 22,687. If we lose that fib level, you know, we're probably going to come down to that golden pocket, which is down here. So, and you know, if that golden pocket is to fail, then yeah, you've got a couple more points. The 20K or the 22K psychological level, that 2020 low of which was 21,815 on that pullback, which is that blue dotted line here. And if that fails, then we've got the 786 as the last resort of you know, a bullish bounce. If we get a full retracement, even a double bottom isn't bearish. Like if we double bottom, which is like testing this low again, that could be a sign of reversal as well to another push to the upside. So there's a few things going on to potentially turn this train around from crashing. So we've got a red momentum dot on the 4-hourly chart here. You can see that here. And we're going to see if that actually gets set in, because it's still got an hour and 55 minutes left, this 4-hourly candle. So that could change. That could disappear if price decides to climb. But we'll see what happens. Just going to make this a little narrower on the pixels just so we can see the candles still. So that was position 1 opened. If we're to fall to the golden pocket, I'm going to call that position 2, and it's probably going to, we'll wait for that signal to come in before we open a second position. So it's likely to do something like that. And then if that fails, if we lose the golden pocket and come down to, say, the 786 or the 20K, you know, psychological level, that'll be like the third buy, which we'll wait to enter on a green signal on the cipher indicator. So, and if you're weighted, like if you're dollar cost averaging with weighted averaging, so you're buying light to begin with and then getting heavier as price falls. So let's say $100 on the first buy, 200 on the second buy, 400 on the final buy. So $700 altogether, and that's the way it's spread out across three positions. So when you buy between 2 points at equal weight, your position will be in the middle of those 2 points. But if you've got a heavier buy on the bottom side, your position has a bias toward the second buy because it's heavier. And then, so let's say you did that and then your position is somewhere here. So you're holding $300 at, say, roughly here. And then let's say price drops and you want to take advantage of, the cheaper prices again, then you would average out the buy down here from the buy up here. So you may even want to make that 600 instead of 400, just so that, the heavier you go. So that's $900 altogether. You could round it up and just make it an easy 1,000, just for, because you really want to get that final buy the heaviest. So, okay, 300, let's make that 700. That makes it, we're playing with 1,000. Okay, that's a bit better. So how does a position between here at 300 and then down here at 700, where does your position now lie? It's probably somewhere down here, like here. So you can see with dollar cost averaging, it turns these two bad entries, or seemingly bad after the price falls, into a much more healthy entry to work with when we finally get that reversal and push to the higher levels. But that is one way to work with dollar cost averaging. And Olog says it's probably better to buy support and sell resistance. Yes, that is, I totally agree with that. This is just a dollar cost averaging strategy using this cipher indicator. We're just going to back test it. So this is all hypothetical, guys. So this isn't instruction to follow exactly this. This is not financial advice. This is just testing out an indicator to see if it produces the results we're after. And if it does, then hey, we might have found a strategy that is profitable, no matter what the market's doing. You know what I mean? So, all right, let's label this as well. So we'll call this buy 1. Let's make it capitals. Make it bright green. Lock that, and we'll lock the position, the little circle. So something really cool in TradingView is you can group things together. So let's say, I'm going to label that. You can label things as well to make it clear. You can go buy 1. Whoops, that didn't work. Let me fix that. Buy 1. There we go. And the circle is buy 1. And then we've got our strategy here. Okay, so you can group these together. If you hold shift, so you click on the first one, hold shift and click on the last one, right click and go, what is it? Create a group. And we'll call this group cipher strategy. Okay, and so if I'll turn this on. The cool thing about it is you can turn off or on the whole folder, which groups everything together. So if I want to just like show it and hide it quickly, I could do that. Okay. So yeah, I guess 4-hourly time frame, it might take some time before we get another green dot. So in the strategy as well, what I might do is add in a bit of text to this one. We'll say using $1,000. Okay, we might want to move that up a bit just so you can see everything. Yeah, that's it. Okay. All right, this can go hidden again. I'll lock it and hide it. And then it's all there with our strategy. All right, and then, yeah, we'll check back on this in the following streams to come. We might follow it for a month or two and just we'll see how it goes over time. But yeah, that's something to look forward to at each stream, just to see how the strategy's playing out. So yeah, we've set our first buy with this strategy. We've bought here as the indicator told us to. And we'll say that that first buy was for $100. And then the second buy will be for 200. So that's 300 so far on the table, $700 remaining in available balance. And if it falls for a third time, then we can put the rest of our balance into that third position. Now, obviously, price can drop further than that third position. So that's where risk management would come into it, and you would be having a stop loss put in place so that if it did fall again, it would take you out of that position at a loss, of course, but at least you're not going to get liquidated or be holding bags for a long time if you're if it's just spot market buying that you're doing. But yeah, just remember, stop losses are there to help. All right, so I'm gonna hide this because we don't need it now, and we'll put this back on golden pocket only. Cool. And yeah, that's pretty much where we're at. I think, yeah, we'll get some kind of a bounce happening in this area. If not, we might already be starting to bounce here. Who knows? We'll see. We'll definitely be able to see by the next stream. Yeah, it certainly does. It sucks when if it starts going up and you've only entered light. Yeah, I mean that's the downside to dollar cost averaging and not going all in on signals is, if it does go up, you're only in very light. But hey, profit's profit. So yeah, it's a judgment call. If you want to throw the dollar cost averaging out the window and just go all in on signals and see how it goes, use a stop, like a reasonable stop loss, then yeah, go for it. Anyway, guys, that's it from me today. Thanks for tuning in, and I'll catch you on the next stream. Peace.